Have you ever pulled up a stock chart and just felt completely lost? It's just a crazy jumble of lines and colors, right? It feels like trying to read a foreign language. But what if I told you that every single one of those little shapes is actually telling a story about a fierce battle between buyers and sellers? Today, we're going to learn that language, and by the end of this, you'll be able to see that story for yourself. I mean, just look at this thing. It's a pretty typical stock chart. And at first glance, yeah, it's a bit of a mess. But hidden inside this sea of red and blue are all these fascinating clues about market psychology, about fear and greed, and moments of total indecision. So the big question is, how do we get from seeing this wall of confusing bars to actually reading the story of the stock? Well, that's exactly what we're about to break down. So first, we got to understand the problem these charts were even designed to solve. See, to get a real feel for a day of trading, just knowing the final closing price of a stock, it's just not enough information. It's kind of like trying to understand a whole football game by only looking at the final score. You miss the entire story of how the game was actually played. To really get what's going on, traders need to see four crucial pieces of data. For any period of time, whether that's a day, an hour, or even just 1 minute, you need to know, where did the price start? That's your open. How high did it climb? That's the high. What was the lowest it dropped? The low. And finally, where did it end up? That's the close. The whole challenge is figuring out how to visualize all four of those things at the same time. And this is exactly why your standard charts, the ones you see in a PowerPoint presentation, just won't cut it. A pie chart, a column chart, they're great for showing a single number, but they completely fall apart when you try to cram 4 different data points into one little graphic. We need a tool that's built for the job. One of the early solutions was something called the bar chart. And hey, it works. The very top of that vertical line is the high for the day, the bottom is the low. That little tick on the left, that's the open, and the tick on the right is the close. So all 4 data points are there. It's functional, but let's be real, it's not exactly easy on the eyes, is it? Especially when you've got hundreds of them all smashed together. And that right there is the crucial point. The biggest drawback is that it just has no visual appeal. When you're a trader trying to spot patterns in the blink of an eye, a screen full of these little lines and ticks becomes almost impossible to interpret quickly. It's so hard to see the story at a glance. So naturally, traders started looking for a better, more intuitive way.
And that better way actually came from 18th century Japan. It's the Japanese Candlestick chart. It takes the exact same 4 data points, open, high, low, and close, but it displays them in a way that is just so much more visual and instantly understandable. This is the default chart for pretty much every trader today, and for a very good reason. Let's build one together from the ground.
All right, first up, the most important part of the candlestick, the real body. That's the thick rectangular part. All it represents is the distance between where the price opened and where it closed. You can think of this as the main event of the day, the real tug of war between the buyers and the sellers. And the size of that body, it tells its own story. A long, stretched-out body means there was a huge, decisive price move from open to close. But a short, kind of squat little body, that tells you that despite all the trading that happened, the price didn't really end up that far from where it started. There was a lot less conviction in the market. Next, you've got the shadows, which people also call wicks, because they look like the wicks of a candle. These are the thin little lines sticking out from the top and bottom of the body. The very tip top of the upper shadow shows you the highest price hit all day, and the very bottom of the lower shadow shows you the absolute lowest. They show us the full range of the day's drama. And now we get to maybe the most powerful feature of all, color. In just a fraction of a second, the color tells you who won the battle for the day. If the candle is green or blue, we call that bullish. It means the buyers, the bulls, won, and the price closed higher than where it opened. If it's red, it's bearish. That means the sellers, the bears, were in charge, and they pushed the price to close lower. It's an instant scoreboard. Okay, so we've got the basic anatomy down. We have our building blocks. But the real magic, the real secret, happens when you stop seeing these as just individual data points and you start reading them like words that form a sentence. The shape, the size, and the color of a candle tell a very specific story about what the market was thinking and feeling. Let's look at a few basic patterns to see what I mean. First up, let's look at a pattern that just screams pure one-sided conviction. It's got a great Japanese name, but you don't even need to remember it. Just remember the story it tells. It's called the marubozu. A marubozu is basically a candle that is all body and has no wicks, or tiny little wicks. A blue one means the buyers were in absolute control.
The stock opened at the lowest point of the day, and it closed at the highest point of the day. It was a total one-way street. A red one is the exact opposite. Sellers dominated from the opening bell to the closing bell. This candle yells conviction and strongly suggests that whatever was driving the market that day is probably going to continue. Now let's look at the complete opposite story. What happens when neither the buyers nor the sellers can get an edge? Well, you get a pattern of total indecision, and it's known as the spinning top. Just look at this thing's anatomy. A tiny little real body tells you the open and close prices were super close to each other. But those long shadows, they tell a wild story. During the day, the buyers pushed the price way, way up. Then the sellers fought back and shoved it way, way down. But in the end, nobody could hold their ground, and the price just settled right back where it started. This is the perfect picture of a market stalemate. It signals nothing but uncertainty. And finally, let's check out a pattern that often signals a major plot twist in the market story, a potential reversal in direction. This one is called the hammer, and you'll often see it pop up after a stop has been falling for a while. The story of the hammer is just fascinating. So picture this. The market opens, and the sellers who've been winning for days keep pushing the price down, 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 creating that long lower shadow. It looks like it's going to be another awful day for the stock. But then, suddenly, something changes. Buyers see the low price as a bargain, and they storm back into the market, pushing the price all the way back up to close near where it opened. It's this incredible comeback story, and it suggests the sellers are finally exhausted, and the bulls might be getting ready to take over. Okay, so we've learned the alphabet, the parts of a candle, and we've learned a few key words, simple patterns like the Marabozu, the spinning top, and the hammer. Now it's time for the payoff. Let's go all the way back to that confusing chart we started with and see what it looks like now. So on the left, that's where we began, a wall of data. But on the right, that's what we see now. Hey, look, right at the peak of that rally, you see that little cluster of spinning tops? That's the market screaming indecision right before the price fell. And check this out. Down here, after that steep drop, see that little candle with the long lower shadow? That's a hammer. It was signaling that the sellers were losing steam right before the price bounced back. It's not noise anymore, it's a series of stories. And this brings us to the most important takeaway of all. Candlestick charts are not a magic 8-ball. They don't predict the future with 100% certainty. What they are is an incredibly powerful visual language for reading the psychology of the market in real time. They help you understand that battle between buyers and sellers so you can make more informed decisions based on the story the market is telling you right now. You know, learning to read candlesticks is like learning any new language. It takes a little practice, for sure, but it completely opens up a new way of seeing things. The next time you look at a stock chart, you won't just see colors and lines. You'll see conviction. You'll see indecision. You'll see reversals. You will see a story unfolding right in front of you. So now that you know the language, what stories will you see?